All right. Hey, everybody. This is Jeff, your swing trade warrior with warriortrading.com. I'm back with the watch list build for Monday here, and we're going to go over a little market analysis heading into your swing next week, and also the start of some big earnings. So, looking at the chart of the S&P here, the SPY. These lines have been drawn out here for weeks now, so these levels are obviously support and resistance, and they will be in play for quite a while, as long as we're in this area, this neighborhood. So we started tapping this 208 level this week. That was our next resistance target after 205. If you watch any of my previous videos, you'll see when we started out down here, before all this stuff was put in, we were able to identify these areas just using basic technical analysis, looking for long-term support areas. We have this typical move up and consolidate, sell off, and then another leg up through resistance here, tap the next area, consolidate, sell off. Then we have another move up here, take some profits here, sell off, consolidate. Then we tap this 205 area for a while. We broke above it, then we dipped down below it, found support here at the 9 moving average. Purple line, and then now the market is testing the 208 area. So the next logical thing is to test the 208 area, come back down to 205, or looks like it's time to put another line in here for the next move up here is 210, 210.50 or so, somewhere in that area. We'll probably see a test of here. Then after that, it's the all-time highs. So we'll see if the market is going to be strong enough to get up there. Earnings season here is a lot of volatility comes with it. There will be a lot of activity in the market, and so we'll see what kind of impact that has. So that's what we're looking for. We need this 205 area to hold support. We're testing resistance now, so either we break it and move to 210 and sell off back to 208, or we kind of stay here and test this area and chop between 205 and 208. Of course, this is absent anything major happening in a macroeconomic sense. So, like any other day, I wait till the market is closed and I run my scans for my watch list on Monday. One of these little cheapies here, little small cap BCRX, is down from the $6 area here after. Oops, hang on. Okay, where was that? BCRX here is down from the $6 area. Made new lows here. Put in some earnings, and earnings weren't so horrible, but you can see that the price has just barely begun to climb, and it is testing and holding support here at the 20 moving average, looking for the 50 moving average, which is this white line here in no man's land, and then after that, there's really not much resistance until we get back to $6. Not in the last couple of years. So, first target on this trade is going to be 350. Our entry point on this trade. Now, given that BCRX did close at the highs on Friday here, we're looking for a 315 entry. Why did I choose 315? Well, one, you have to choose something that gives the stock enough room to possibly put in an open range on Monday. And if it's closed at 310, getting in at 310 would be it'd be too soon. It'd be premature. So we'll give it 5 cents here to see if it can pop up to 315. But also because it's a technical level where it was a high, it's the second highest day from this range since disaster struck and this thing gapped down right there. So you can see 315 is the high of this day, and then over here on this green candle we have a high of 324. Zoom in here a little bit so you can see a little better. So our entry price here is going to be over 315, and we will add to this trade at 324. And then once we'll put our stop at $3, and once this thing starts trucking, our first target is going to be 350 area. Okay, so we're going to look to take some profits there. We'll see what happens at this area, and then if it looks strong and volume keeps coming in here, this thing is capable of some larger moves. So if the volume wants to come in, buyers push us over the 50, we could see a squeeze, not necessarily back to $6. That'd be kind of wild. Could happen. Might catch a gap or two, especially if we test this 350 area on Monday by the close. Let's say we could definitely see a gap higher to 450 maybe. So it could be an interesting trade, very risky obviously. This thing is capable of big drops, and conversely we're looking to catch a big move up here. So it is liquid, traded 1 million shares on Friday, and so we can take a little bit bigger size. It only has a 16-cent ATR as of late, but like I said, it is capable of much bigger moves, so something to keep in mind. BCRX will be on watch for us on Monday. Another name, that's interesting. Another name is Fit here. Fitbit, I've traded a lot in the past, had good success on it. Most of my success came from this trade just post IPO, when this thing was around 50 bucks. Shorted it for a nice gain to the downside here. As you can see, it's never really recovered from its horrible trend. So just now is the first time in 2016 that this stock has been in any sort of bullish pattern. So take a look here, going back, let's open this up a little bit here, going back to their IPO, which was last June. This thing shot up over the moving average here, right? Because there hadn't been any moving averages. There weren't enough periods. There weren't enough periods established to have a moving average. So the 20 and the 50 come in. Now, generally, you can determine the trend of a stock by its position or its price action in relation to its moving averages. The 20 and the 50 are shorter-term moving averages than the 200, which is the yellow line on my charts. So a stock trading above the moving averages would be considered in a bullish trend, and a stock trading just below the moving averages or below the moving averages would be considered bearish. The point at which they cross the moving averages can signal a trend reversal, and generally when price action goes to crossing the moving averages, you're going to see a narrowing of the two. So here's an example of the 20 and the 50, right? Price action is sideways for a while, it gets kind of narrow, and then these moving averages pinch each other here. You get an attempt to break out, but it ultimately failed and sold off pretty hard. Haven't really seen anything similar. The moving averages were very wide, and the stock was in a very clear downtrend. March, it looks like it put in a small bottom, and it curled up off the bottom here. It's testing the 20 EMA a couple times, using that as support, and finally, as of this week, we popped up over the 50. So this appears to be holding over the 50 for now, and this would be the first time this has traded for 3 days over the 50 moving average since. This was only 2 days. Only a couple days here. I mean, since back in September. So, Fit, another liquid name. It used to be very volatile. It still can be volatile, but it's calmed down a lot. So it's a little bit easier to trade. Looking for a long on this over the 1750 area. Okay, high of Friday was 1745. So 1745, 1750. We'll get that $0.50 entry, and we're going to look to ride this up to the next logical area of resistance. Looking at this chart, recent term, this thing has never traded at these levels since January, February. So we have this move down, this bounce right here, a little dead cat bounce. It puts in a top at 2050 or so. It sells off again, puts in a bounce, dead cat bounce, a little top, 1932, and it resumes a trend to the downside. Now, dead cat bounce is a temporary retracement in price action. So if something's downtrending hard, such as Fitbit here, you get a temporary retracement, right? It bounces for a day or two, and then it resumes its trend back to the downside. So that's what this pattern would indicate. It's very bearish symbol. People come in here after this big move to the downside, and they say it can't possibly drop anymore. I'm a buyer here. I'm going to average down, or it's going to recover, and then they buy in, and the next thing you know, they're back down another 10-20%. So it can keep going lower, and in this case, it did. Anyways, we're looking for a move over 1750. The first target is going to be the high of the most recent bounce at that area, 1930. Okay, and then you can see it's a pretty clear pivot point, right? So previous resistance will become future resistance here. This is also like I said, a pretty big pivot after this last bounce attempt. So then after 1932, if we get through that, we could see a high of 2050 or so, somewhere in there. Now, probably be mostly out of the trade by then. This is, like I said, a very volatile name. It can be a very volatile name. I suspect $20 will be a big mental whole dollar number. Fitbit may have trouble getting through. I don't know. We'll see. But if we get in here at 1750, we'll be firmly in the driver's seat, and it can test 20 all at once. We'll either take our profits or do whatever we want because we got 2 points on the trade. So anyways, Fitbit is going to be along over 1745, 1750. We'll put a stop down at 1675, and we're going to look for a move to 1930 or 2050, somewhere in that area. And I plan to, it's kind of one of those names that has a lot of chop potential intraday, so I won't micromanage it. It's kind of one of those, you have to give it some room, and we'll definitely look to set our orders ahead of time, and hopefully we can get some sort of support from the market. If the market isn't up or down, hopefully it's at least sideways, and that should work out well for us. All right, one of the other names I want to talk about is GIMO. This is Gigamon Incorporated here, and we are looking at a short opportunity on this name. Okay, this thing has put in a pretty big move to the upside from 2015, all of 2015. It ran like 150%. Then it sold off from 2015 till October 2015. It sold off 50%, and then since then it's been trading sideways and only recently been in a pretty strong uptrend. We're rolling over back below the moving averages here, so this is something I want to take note, or I want you to take note and see if you can see what I see. Going back to the short history here on this is a two-year daily chart. What I see here is this thing moves up, and as soon as it starts breaching the moving averages, it comes down hard. Okay, this thing moves up, and as soon as it starts breaching the moving average, it comes down hard. And then it moves back up, and it keeps moving up, never tests the moving average for any kind of, in here I gave it a little bit of a test, but it really was more of a sideways action, and you weren't getting this candle under candle. So then we have this big gap up, holds the moving average as support, comes and makes a new high up here at 35 bucks or so. Then it breaks the moving average here, and it just falls apart, right? So this thing just completely collapses, comes back up, tests the moving averages again, and it falls apart. It wasn't until the last earnings event, or a couple events ago, that this thing ends up popping up over the moving averages, starts all over, trades alongside them before it just can't hold up, sells off again. So point is this has a very repetitive pattern. Here we are, big move up, trading along the moving averages here. All right, we've already broken through the 20. We've just breached the 50 for the first time since, I don't know, since February or so. And now we can look for a move back down to the $26 area here. That's going to be our target on this. Somewhere between 26 and the 200 moving average. All right, why this $26 area? Because it was a previous support area the last time the stock was at that level, right? You can see 1, 2, 3, 4 days in a week here, it tested that 26 area and it held. Come through here, tested that same area again, it held up. It was resistance through here, previous support. Right here, support has become resistance, right? Previous support, future resistance. Previous support, right here, and now it's going to be support again. So support for the stock, but it's going to be resistance for us shorts on this. Looking to get into this trade here, we're going to get into it somewhere under the 50 moving average here, the 2850 area, probably once we break the low. And then we'll definitely add, where it's the half size start, and then we'll add to this trade once we do get candle under candle confirmation. The reason I want to scale into this one is because I want to wait for candle under candle confirmation to go full size, but because we are so far away from the entry of a candle under candle here, it's the stock closed at 29.04, and the candle under candle would be at 28.16. That's just about $1 away. This thing only has a $1.34 ATR, so I don't want to wait that long. I want to scale into this trade, take a little piece here. If I'm wrong, I'll stop out with a half size loss, but if I'm not, and then this thing takes out the lows, I'm going to scale into it, and I didn't have to wait. I'll have a better average, and I didn't have to wait for it to come to the previous low to get our candle under candle. So we're going to scale into this here at 28.50. We'll add at 28.15 or so, under 28, and we're going to look for a move down to 26. Okay, this is going to be maybe a 1 or 2 day trade. If the market comes in and it gets a nice setup, and remember, we're basing this off of, well, basic technical analysis here, right? You know, how this thing behaves around the moving averages. It's pretty clear every time what happens, and so I mean, this is the best example where we broke the 20, we tested the 50, came down through the 50, and then eventually all the way down to the 200. Kind of the same thing happened through here, right? Not only do we break all the moving averages, we went below them. And so we're just looking for a move down 26. We're not getting greedy. We're not trying to take this thing to zero. Just looking for a 3 to 5%. We'll be out and move on to the next one. So that's GIMO, and that's our short name for Monday. One other name that is going to be in play for me on Monday is NFLX. I'll be watching Netflix. Their earnings are after hours, and I'm going to look to put on an iron condor. I considered doing a reverse iron condor, but it's too late to get in. I think premiums are going to be too high, so I don't want to. I don't want to push my luck there. But I'm looking to do, as of right now, this will be based on. This will be based on today's price action, or we'll see what happens on Monday. The earnings are after hours. Okay, so I'm looking to do an iron condor. Price action is in the middle here, and I'm going to look to put on my put side. I'm going to look to put on 100 by 95 put spread, and then we're going to do a 122 by 128 call spread, or 123 by 128 call spread. Excuse me. So they're going to have a width of $5 on each side. And as of right now, that's a credit of about $1.50. I suspect maybe we can do a little bit better come Monday when implied volatility peaks for this. We'll see where the price action brings us here. This is a little extended here to the upside, maybe, but I don't think it's really going to matter much. I think the implied or the market maker move is I think it's $11.50 or something. So we're right there at $11.50, $12 out. We'll see ultimately where we can set up on Monday. But we're looking to collect $1.50 credit with about, as of right now, about an 80% chance of, or 80% probability of success on that particular trade. So just remember not to oversize yourself, because if we're wrong and this thing puts in a 40-point move, you can lose $350 per spread. So if you take more than just a couple of them, you can get touched on this if you're wrong. These are higher probability setups. However, they do not have the best risk-reward ratios. You're trading your reward for a higher percentage chance that you're right. So if you're wrong, it's really going to sting you. Just keep that in mind. I always tell our students, if you're going to trade spreads or condors in this particular type of situation, I would not trade more than one spread for maybe every $10,000 to $12,000 in equity in your account. So that's something to keep in mind. You don't over leverage yourself, and make sure you can absorb a loss. You always have to plan for the downside. The wins will come, but if you're not managing your losses or preparing for them, then you're going to be taken out of the game, blow up your account before you ever had a chance to be profitable. So it's one of the things that took me a long time to learn early on, and so I always plan my losses before I plan my wins, and so far it's kept me out of trouble. So other than that, we're going to be looking at Netflix, GIMO, FIT, and BCRX on Monday. If you guys have any questions about this, you're watching this on a recording later on, shoot me an email, jeff@warriortrading.com. Always happy to answer anyone's questions. Hope you guys like these setups. Put them on your watch list too, and we'll see what the market brings us. Hope everybody has a great, safe weekend, and I will catch you all next week. Take care.